Okay, hello and welcome everyone. Welcome to JFD Brokers Traders Tea Time with me, Darius Anucauskas. Today's the 27th of March 2019. So welcome everyone. Welcome to this, as I said, JFD Traders Tea Time. So we're going to have a look at a quick view of the markets and what's happening with them right now. A few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so guys, now let's jump into the charts. Now the first one I want to touch on here very quickly is DAX. Now looking at this one here today, of course, it's trying to push higher. It's in the positive territory, but as you can see from this chart, this 4-hour chart that I've got here, you can see that DAX was trading comfortably within this rising channel formation up until the 22nd of March, when it actually broke it to the downside here and then moved lower. Now of course today we're seeing this retest of the lower bound of this rising channel. Of course this is what we're going to keep on monitoring, because if this index gets back inside this rising channel, then of course the downside could be slightly off the table. We could see further acceleration here to the upside, but to be honest, for us now to get slightly more comfortable with higher areas, we would like to see a nice good push here above the 11,680 zone, and this way we could then target, of course, these recent highs, these the March highs, which were around the 11,820 zone. But there's another level that we're keeping a close eye on here, is the 11,850 zone, which marks the high of the 17th of October. So in a way, basically for us, like I said, even if we're going to see this one traveling higher here, for us, in order to, let's say, to get slightly more comfortable with higher areas, we would like to see a nice good push back above the 11,680 zone. Of course, for those who are more adventurous, let's put it that way, you could in a way start looking at higher areas already if we see a push above the 11,570 zone, approximately there. But then of course you still have that chance of this one reversing sharply back down here and dropping below the lower bound of the rising channel formation. So that's why, guys, for now, in terms of with the upside, of course this is a bit tricky because it's currently like I said, getting held here by the lower bound of the rising channel formation that the index was trading in previously. If it gets back inside, then we'll start considering the upside again. But if this actually continues to hold and the index struggles to get back inside the rising channel formation, then we could see maybe another leg of selling. For those who are more on the cautious side, you could in a way wait until we see a drop below this little area here near the 11,375 zone. This would also automatically place the index below its 200 EMA here on the 4-hour chart. But again, like I said, it's better to be safe than sorry. So we could see maybe a slight lower. Now again, don't get me wrong, a better confirmation of the downside could be a break of this low here that we saw on Monday. This is probably more for those who are very cautious and very careful with everything. So guys, you could in a way wait for a drop below the 11,315 level first and then target lower areas. But like I said, don't get me wrong, there could be some selling interest picking up here if we already see a drop below the 200 EMA here. Yep, we could see further slide lower, but like I said, if you want, you could wait for that confirmation break here of the 11,315 zone and then aim for lower areas. So keep your eyes on this one. For now, we're more neutral on this one, but we're going to keep a close eye on some of these key levels that I just mentioned. Ethereum, not much happening here. Just wanted to have a quick update on what's the situation. So basically, it continues to range here between these two key important levels, between the 129 on the downside and the 140 level on the upside. Certainly, if we do get a nice pop here above this upper bound of the upper side of this range, then yep, of course, we could then target higher areas. But for now, we can see this is where it is. Again, at the same time, you can see that the crypto is still trading above this upside support line, taken from the low of December the last year. So, to be honest, because it's still within this range, I mean, it's quite difficult to say where exactly it wants to go. My only little fear here that I've got is that so that it wouldn't just continue ranging here between these two levels, the 129 and the 140, and then kind of automatically just hit this upside support line at some point later on in the future, and then have a nice rebound from it and push higher. So for now, this is of course my little fear, because this would actually take us ages until we could see some sort of interesting moves from this crypto. But again, it is what it is right now. So continue observing these key levels and wait for that that pop either through the upper side here, through the 140 level, or the 129 zone on the downside. Drop below that could lead towards slightly lower areas. But again, if this happens sooner, then the next target for us is going to be the 122.50, approximately there, which also kind of coincides with this, currently coincides with this upside support line as well. So could be that additional support for the bulls, and then maybe if the crypto fails to drop below this, then yep, more buying activity could pick up here, and then we could see this one traveling back up again. But again, for now, and this is just pure speculation, let's see what it wants to do with this range first. Does it want to break it to the upside, or actually break it to the downside? NZDCAD, now of course this one is a very interesting one, given the fact that the NZD took a strong hit this morning, and now you can see that NZDCAD sold off. And now what's more interesting here is that the pair is currently balancing around its 200 EMA, which is also around the upper bound of the range that the pair was trading in previously, starting from January, starting from the beginning of this year. So basically, you can see that from around the 2nd of January, this this pair was trading here within this range between the 0.8915 level on the downside and the 0.9110 area on the upside. And now the pair is currently testing the upper bound, well, from above basically. And now let's see if it actually manages to get back inside of this range, or actually is this going to stay here and then maybe push back up again. But again, for now, we can't do much apart from just wait for that confirmation break. So of course today we already saw a drop back into this range. Again, keep your eyes on this one. It quickly traveled back above it, but if we see another push lower here, now as some say, the third one could be a lucky one. So yep, we could see then further declines, and of course we're not going to target the lower bound yet, because we still have this short-term tentative upside support line to overcome. Because this line, you can see that even though we did have a few touches here, like I said, we could have that third touch, and it's also approximately around the area where the 0.9030 level is, and then this area acted as a good area of support here back on the 6th of March. So for now, guys, of course, this is the situation. If we see another drop below the 0.9110 level, or even if you want for a better confirmation, the 0.91 level itself, if we see a drop below that, then yep, further declines could be possible. But in terms of the upside, for us, let's say, to get slightly more comfortable with higher areas, excuse me, slightly higher areas, we would like to see a nice good push back above the 0.9180 level, which previously acted as a good area of support here on the 22nd of March and also on the 21st of March. So if we see the rate traveling back above the 0.9180, this of course could potentially interest more buyers, and we could see this one traveling further up here towards the 0.9215, or even back up here towards the highs of March, which were around the 0.9280 level. So and by the way, these highs were still we're still in play on Monday, so this week. So you can see how severe of a drop we had overnight here. And so yep, for now guys, this is the situation. So basically, in terms of the downside, the 0.9110 or even the 0.91 level, this is what we're looking at in terms of the downside. A break below that, of course, but in terms of the upside, the 0.9180 level, we're going to be this is where we could become a little bit more comfortable with higher areas. USDCHF, now I'm not going to spend too much time on it because you can see yourselves what's happening here. It's currently stuck here between these two levels, the 0.99 level on the downside and the 0.9965 area on the upside. So basically, long story short here guys, a push above the 0.9965 of course could increase the chances for the pair to travel higher, maybe even actually to go towards the psychological 1 level, or maybe just slightly above that, the 1.0020 zone. But if this decides to drop below the 0.99 level, then keep your eyes on the 0.9850 level, and of course this short, or should I say medium term upside support line taken from the lows of around or actually let me correct that myself, and this is more of a long-term upside support line taken from the lows of February last year. So this could be a nice touch here, but again, first before we can consider this area, we would like to see a drop below the 0.99 level first, and then we will aim for lower areas up until the this long-term upside support line. So keep your eyes on this one. GBPUSD certainly still in the spotlight. It's a bit calm today. You can see that it is kind of currently balancing around the 132.20 zone. It's kind of trying to pierce through it, but then quickly getting back below it. It's currently kind of a little bit of sideways activity here that we're seeing. In terms of the downside here, I mean, you can see that the pair is still trading above this upside support line taken from the low of January this year. Now this short-term upside support line continues to remain in play here. So in a way, if we see a drop below the this little area here, let me just quickly put that on a chart, below the 131.60. This is what I'm talking about here is more short-term, guys. So if we see a drop below the 131.60, now this could of course open the path towards slightly lower areas. Initially we will target the 200 EMA, but then we will aim for this upside support line, and this is where we're gonna kind of stop the downside for now. Or should I say for the time being, if we see that drop below the 131.60. So of course, because it might hold again, if this long-term this short-term upside support line might hold again, and we could see maybe a rebound and a push back up again. But that's only in the case if the bears kind of struggle to close, let's say, even a week below this upside support line. Now if the bears manage to close the week below this upside support line, then yep, further declines could be possible. Of course, we will target the psychological 130 level again, but before we can kind of assume all these levels, we need to see a drop below this upside support line first. But again, even before that, we need to see that drop below the 131.60 level, and then we will aim for slightly lower areas. In terms of the upside, well, I mean, if this travels higher here back above the 132.20, in order to, let's say, to get slightly more comfortable with higher areas, we would like to see a nice good push back above the 133 zone, and then target higher areas, the areas areas that we saw here in March, in mid-March, and even maybe going higher towards the 133.80 and above that. So just to kind of let you know that the 133.80 was the high of the 13th of March, or in other words, the highest point of March. So basically that's why for now we're going to be more conservative on the upside, and with the breaking point here, and like I said, we'll wait until this travels back above the 133 level and then aim for higher areas. And like I said, I'll repeat myself, in terms of the downside, the 130, 160, that's what we're going to be looking out for in order to kind of aim for slightly lower areas. EURJPY, now very quickly on this one, it's currently kind of well, should I say, put it this way, it did sell off here nicely on the 22nd of March, and you can see it traveled lower. It managed to break its key area of support here near the 124.25 zone, approximately there. It briefly traveled below it, but then quickly kind of got back above it, and now it's again testing this 124.25 zone, and of course this is where the big question here is going to be. If we're going to see a drop below the 124.25, of course this increases the chances for the pair to travel lower, but for a better confirmation of the downside, we would like to see a nice good break below the 123.80 level and then aim for much lower areas. Initially, of course, aiming for the 123.40, which was marked here near the lows of the 15th of January. But then if it continues to slide, then yep, the 122.55 zone approximately there could play out nicely as well. And for that one, just to kind of show you what that level was in the past, and we need to scroll quite a bit here, and this was marked, it's marked near the lows of the 18th of March and also near the lows of the 6th of June, so, or should I say 7th of June more precisely. So that's why this could become a very good level as well, good potential area of support, but only if we see a drop below the 123.80. But of course, before we can see that, we need to see a good slide here below the 124.25, where the pair is currently getting held at, because you can see that how well this played as a strong support back here on the 8th of March and also on the 15th of February. So in a way, if this rebounds here back to the upside, for us, let's say to start looking at higher areas, we would like to see a nice good push back above the 125 zone and then aim for areas like the 125.70 or even higher. But for now guys, let me just quickly adjust this level here. For now, this area here is gonna keep us a little slightly more in the neutral zone, and we're just going to continue observing some of these key levels that I've just mentioned. So the 124.25 level on the downside, a break below that could lead towards the 123.80, but again, a break below the 123.80, this is what we're looking for, because this could this would confirm a lower low and could lead towards much lower areas. And like I said, in terms of the upside, is the 125 level that we're keeping a close eye on, because a nice good pop above that could open the doors to slightly higher areas. Okay guys, I hope you found it useful. Thank you very much for watching and listening, and if you want to join me tomorrow morning at my Traders Espresso, and that's 7 o'clock GMT time. But for now, I hope you have a wonderful evening, and I'll see you tomorrow. Bye bye.